Good morning, BixWeirRoadRuler.com with your morning horn of Z's, your sip of coffee. Okay, let's talk silver manipulation. New information out from the derivative report just came out. Interesting, shall we say? But there was a little operation this morning in silver. You can see it easily right here. The slam down. Nothing new, right? 20 years of watching this stuff, you get numb to it all. Silver, just like cryptos, you're going to have to hang on for dear life as we go through this process of the banks crashing and going down, being destroyed. I will talk about that in the Friday road trip for private road members today. We're going to be talking about the repos. I had lunch yesterday. It was like 7 Harvard Business School guys. Really interesting lunch. And we talked about all kinds of things, especially the repo stuff and where the hell they're looking to put their money. They know nothing about. They're starting to learn about commodities and and gold and silver. They know nothing about the manipulation factor. Cryptos are still way out there for them. I tried to explain cryptos to them. They just can't get their head around it, which tells me, these are some of the smartest business people out there, working for big name companies, and literally they know nothing about cryptos. And I'm like, you guys, blockchain. They're just starting on the Jamie Dimon. Well, blockchain's good, but screw Bitcoin. They don't get it. I said, you guys, it's going to cost you. It's going to cost you big. But it was a really good lunch. I'll talk about that in the Friday road trip for private road members, because we talked a lot about repos and what the plan is and what the plan was. Interesting stuff. But let's talk more about silver. Yes, we do have silver manipulation continuing. The gold-silver ratios are around 83, 84, something like that. Amazing time. If you have gold, to swap gold for silver, obviously, even if gold and silver go down in tandem, you're looking at, where do you want to be positioned for a gold and silver bull run? Well, obviously, silver has historically every time run faster than gold. So now is the great time to swap at 85. The in-ground gold to silver ratio, nobody really knows, but they think it's around 9 to 10 to 1. The above ground is 1 to 1 ratio. I mean, all the ratios will tell you that the 85 to 1 is completely ridiculous. And it's caused because of the manipulation. So if nothing happened to the prices of gold and silver, but it was freely traded, it should instantly go back to a 10 to 12 to 1 ratio. But given that silver has been consumed and mostly gone, I think it'll go 4 to 1, probably in the extreme, even 1 to 1 for a while. So hang on to your hats in silver. But let's talk about the derivative report just came out. And this is the report for the second quarter of this year, of 2019. And if you look at the controllers of our global economic system, the controllers of the exchanges, the controllers of the treasury market, the controllers of the FX market, the controllers of the gold market, the silver market, they're the top 4. Top 2 mainly. JP Morgan Chase has 56 trillion in derivatives. 56 trillion. Blowing away Deutsche Bank, by the way. Although JP Morgan supposedly is more stable. I have a feeling JP Morgan is the problem. I'll get to that in a second. The repo problem is actually being caused by our friends at JP Morgan because they've rehypothecated the collateral. And we talked about that in my little discussion with the Harvard guys yesterday. So get ready. It's all happening, my friends. And then Citibank has 53 trillion. Citibank is not well. They are one of the more criminal banks. I mean, JP Morgan obviously is criminal. The only banker for Bernie Madoff was JP Morgan. and nothing happened to them. That's why everybody's freaking out about the silver thing. Anyway, Goldman Sachs. The interesting thing about Goldman Sachs is it has 49 trillion in derivatives. Is their total assets are only $200 million. So, because Goldman Sachs basically pays out everybody. Everybody's on the dole. All the partners get paid out. But on a $200 million or $200 billion total asset base, they are allowed to write $49 trillion worth of derivatives. Is insane. And then Bank of America and Wells Fargo, Bank of America and Wells Fargo kind of drop off, but they help out a lot with the interest rate, controlling interest rates with the interest rate swaps. Yeah, it is insane. But that's the way Alan Greenspan wanted to build this nuclear bomb. If you deregulate derivatives, you're going to get these insane type of numbers. So that it's basically the top four that control close to $200 trillion worth of derivatives. What could go wrong, right? Well, let's talk about this. This is a great chart on page 31 of the report. If you want to find the report, it's at the, just type in OCC derivatives, Office of the Comptroller of Currency. It's the U.S. government report. And this is just U.S. banks. The rest of the world has their own derivative problem that we're not allowed to see. But look at this graph on page 31. This is the total notional amount of commodity or precious metals derivatives by contract. Now, this is not gold. They removed gold from precious metals and they put it with foreign exchange because it was too big. And it's good for analyzing the silver market because this is mainly silver. Some palladium, some platinum, but mainly I would say 95 to 98% silver. Check this out. This is from now. This is total notional derivative contracts by U.S. banks, and we know who we already. Well, there's only actually two banks in this category, which I'll show you in a second. This is J.P. Morgan and Citibank. This is the only two. Look what J.P. Morgan and Citibank have been doing in 2019. We're at massively all-time highs with silver derivatives. Look at that. It is just literally go to the moon until everything crashes. Now here is when they did their big operation with silver rigging. And here, this area right in here, in 2011 is when, or 2000, no, it was 2009. I don't remember when JP Morgan took over the Bear Stearns silver derivative short position. That was 2008, I think Bear Stearns went down. Anyway, so it's right here, and you can see what happened once J.P. Morgan took over the book. Bang. Massive derivatives to control the price of silver. Any deniers of that are pathetic, and I'll get to that in a second. Even after the charges have been filed and against silver manipulation, all that stuff, they're still deniers. And especially those experts who have been calling Gatta and myself and Ted Butler tinfoil hat people. They just can't take it that they've been busted and it's being exposed. It's not totally exposed yet. They're just talking about the tiny computer manipulation. They're not talking about the bigger picture. The U.S. government's involved. The Exchange Stabilization Fund is involved. We've proven it a million times at Gatta. Anyway, so you can see something ain't right here in the derivative world. And that's how they control prices. That is vast majority, I'll show you in a second, is JP Morgan. As a matter of fact, on page 44 of the report, it's right here. This is the silver, all precious metals, this is silver, no gold in there. JP Morgan Chase has $19 billion worth of silver derivatives. And the amazing thing is, this doesn't count anything on the COMEX, which is I don't think they have hardly any silver shorts on the COMEX. I think Citibank is, and other dealers are dealing with that, and European banks. But And I'll show you how I got to that none of this is COMEX. So this is all OTC. This is behind the scenes money. So $17 billion worth of silver derivatives is 1 billion ounces of silver. 1 billion ounces of silver derivatives. And you could say, well, don't they have 1 billion ounces of physical? Absolutely. So is this a hedge on their 1 billion ounces of physical? It could be. It could be. But how did they get that physical? They got it by shorting the exchanges. That same way that the big money's loading up on Bitcoin right now. They short the exchanges and then they buy OTC. Is it illegal? Yeah, it's illegal to manipulate the price of anything. Is it criminal? We'll find out soon enough, of course. It is criminal. And they're going to jail. Yes, Blythe Masters will be. I told you back when Blythe got kicked out of her DTCC company, supposedly they were trying to build this company called Digital Assets, a crypto company to take over for the DTCC, which all this criminality goes on at. And I get into that in the Friday road trip, which will be posted later today. So you see here with the silver derivatives, there's a total of $40 billion worth of silver derivatives, 17.9, so $18 billion worth is from JP Morgan. $12 billion worth is from Citibank. And those are pretty much the only two U.S. banks that control the silver market at this time. That's crazy, huh? And then we look at, here's an interesting chart, and it shows, right here's the precious metals, and there's the 18, it shows how many are centrally cleared, meaning through an exchange, and how many are OTC, meaning it's not on an exchange. So it might be with the Exchange Stabilization Fund. We just don't know. And all 100% of Jamie Dimon's silver derivatives are not on any exchange. None of them. Zero centrally cleared right here. Over the counter, 100% centrally cleared, 0%. So Jamie Dimon is doing it completely off the exchanges. And then Citibank has a pretty large exposure on, it's either the COMEX or the LBMA, because those are the only two exchanges that trade silver. Interesting. I find it interesting, at least. Here's another interesting thing from the Fed. People have asked me, well, who are these primary dealers? When the Fed wants to go in there and rig the market, who do they collude with? Here's the list of primary dealers. All four of those huge names on the top four, who have 90-something% of all derivatives in the U.S., are all primary dealers of the Fed. So that would be Citibank, JP Morgan, Bank of America, and Goldman right there. They're all four on there. It's like 25 primary dealers. Those are the colluders, the official colluders. And talking about people who still deny that there's any silver manipulation. This is moron Andrew Hecht, who's been a long saying, no, it's tinfoil hat. Those people are idiots. Those silver manipulation people are idiots. So after the JP Morgan charges came out, and after GATA takes his victory laps, I take a victory lap, and we told you so, you idiots, blah blah blah. He comes out and says, here's how he defends himself. Summary. I'll just read the summary. I read the whole thing, and I'm like, oh my god, this is Seeking Alpha. I have been arguing against the vast conspiracy in the silver market. The conspiracy crowd got a big lift this week with indictments. Spoofing has been widespread, and it is illegal. There's no vast conspiracy to depress the price, but bad behavior to manipulate them. Dude, really? Oh my god. Do the charges and potential punishment fit the crime? Apparently, Andrew has friends who are one of these guys. Because throughout the whole thing, he's like, these charges are way too stiff. Oh, Andy. Aggressive trading versus illegal trading in an environment that has changed. He's trying to say, well, with Dodd-Frank, everything changed. Bullshit, my friend. Complete bullshit. I do much more than just articles. A Hecht commodity report. He's an idiot. He's probably being paid off by the same people that pay off Jeffrey Christian. So there's my question. Where is Jeffrey Christian? The biggest bankster shill who for 20 years has been saying, no, there's no conspiracy. You guys are idiots. And now we have JP Morgan, traders busted. Blythe Masters is going to go down along with Jamie Dimon. Just wait for it. It's going to happen. Where's Jeffrey Christian? Where is Jeffrey Christian? Where is Jeffrey Christian's statement like this guy? And Andrew Hecht. There is Jeff. Oh, Jeff. The worst toupee on planet Earth. At least get a toupee that, has a little salt and pepper in it to match your beard, dude. Oh, my God. Complete shill fool for the banksters. All they do is help the banksters rig derivative markets. That's why he was put. The only reason his company was split off, he was basically split off from Jay Aaron, owned by Goldman Sachs, and they said, well, we can't rig the market and have an analyst, so why don't we split off Jeff Christian into this company called CPM Group, and he'll tell everybody the stats, and then we can work together. We can rig this thing together. It's ridiculous, my friends. Completely ridiculous. Jeffrey Christian should go to jail with everybody else. I'd love to see his emails and texts over the past 20 years to the likes of Blythe Masters. It'd be a good one. Anyway, later today I will be posting the Friday road trip for private road members. If you want to subscribe, hit subscribe today. And I am giving away one of the coolest silver coins, the coolest silver coin ever invented. Maybe the US Silver Eagle is up there, but those aren't numbered and they don't have the double stamp luster like the Road to Ruta coin. And I also give away 100 Theta and 500 Theta fuel. Yes, I do believe that just the Theta will pay for the subscription. So come check it out, roadtoruta.com, and join the party, man. It's getting crazy. I'm going to talk about today in the Friday road trip, I'm going to talk about the bank crashing, the repo market, and what it means to cryptos and freeing gold and silver and all that, because I think this is the final stage of the game. And in the final stage, we could go to zero with all markets. We probably will have a shutdown of all exchanges. So it's so important that you can mentally take a zero price for Litecoin and Bitcoin and all that stuff as the old system crashes, because when the banks go, there's going to be no exchanges. So that you don't even know the price. It might be $1 million, it might be zero, it might be. They can put the price with a computer click. They can put the price of any commodity or any metal or any cryptocurrency at zero, literally at zero if they want, with a click of a mouse, because they're not trading the real thing. They're not trading Bitcoin. They're trading derivatives of Bitcoin. So all they do is click. I want to sell 21 million Bitcoins within the next 36 seconds. Boom, price zero, shut down the market, banks collapse, blah, blah, blah. Will it happen tomorrow? Probably not. I do have a date in mind. I'll talk about that. My next date. No, I'm not going to say. I already won that battle. September 11th, it happened. That's why the repo stuff is going on. There was a run on the banks, just like in 2008. And then obviously the banks don't tell the central banks and don't ask for bailouts until the next week, which is exactly when the bailout started on the 15th. So you had the 11th hit. You had 2 days of banks going, what the hell are we doing? All of a sudden, the banks won't even lend to each other, and then the Fed has to step in, which happened the Monday of the next week. So I nailed that, baby. I do have a date when I think the next big issue is going to come up, and it's coming up fast. So join the Road to Ruta, and I'll talk to you guys later.